Good morning, everyone. It's still Sunday, February 6, 2022. This video is just as important as the first video. This Ultimate Traders on Reddit, Nathan from Queens. I want to let you all know that most of the analysts that are out there, the TV heads, are giving you, when they give you a target, they're normally giving you a target of 1 year, which for the most part is fine. But as we can see in this market, post-pandemic, with close to 30% of daily volume with retail, commission-free trading, and social media making easy to interact, that most of us want gains faster. But not just because of that, but for me, I always go quarter to quarter. I write that in my post on Ultimate Traders. I tell my generals all the time, we do not run companies. We definitely do not run companies. Okay, a year ago, Nautilus NLS was the stock was on absolute fire. It was as high as $30, and now it's around $5. But actually, the earnings were good. But that's just one example. Another example is Flowers, FLWS. Okay, it ran as high as $40. The company was executing. It was doing great. This past quarter, bad earnings. Margins were up, inflation was up, meaning earnings were down. Sales were actually up because of the cost of inflation. Earnings, actual bottom line, was down. Another example is Peloton, PTON. Okay, when everyone was home over a year ago, the high was like $170, $180. We got to go quarter to quarter with the stock and quarter to quarter with earnings. But for me, I would rather own a company where the valuation is okay and the company is doing very well. Because as long as the company is doing very well, the stock will eventually go up. It could take time, which sucks. I normally don't like waiting more than one quarter. 1 quarter is 3 months. Normally, in most cases, when a company misses earnings or the stock is down, I give it 1 quarter, 3 month period to decide on the next earnings report whether I should just sell, or if it rallies before earnings, I will sell into the rally and take a small loss. Now, what sucks is if the stock doesn't rally into earnings, the stock goes down, and you're waiting for earnings, the earnings were good and the stock didn't go up. Those are the cases, like with some of the mortgage plays, that I just got stuck. So unfortunately for me, like even 2021, I had maybe close to 30 bags, so 30 losers, but I made probably over 3,000 trades. So my win ratio is like 99 point something percent. The problem is the stuff that I'm down on heavy. So I'm taking a look at the market, the way the market is, the way the market is trading. I make pivots all the time, so I may have to consider a stop loss of like 33%, even on quality companies, because I'm down 60, 70% on some of those losers. So the great thing is I'm winning like 99 plus percent of the time. The bad thing is that the stuff that I'm losing on, like NLS right now, it's $5. My average is like 18 for the third. I'm down like $50,000, $60,000 on NLS. So but the thing with NLS is the company's actually executing. This past quarter, it was shipping problems. But they're going to report this coming week right now, and they actually said on the call, because I actually listened to earnings call, that they're going to sacrifice bottom line for subscriber growth on the subs. But that's just an example. Is not the stock that we had to see well, not the company, I apologize. Not the company that we need to see quarter to quarter. We need to see the sentiment in the stock. They didn't like the stock. Right now, LL Lumber Liquidators, the company is actually executing. Not great, but the company is executing. Wood is up. But the stock, no one likes the stock. LL is like $13 or $14. It was almost $30 or even over $30 this time last year. But if you watch it quarter to quarter, watch it quarter to quarter, even though it's executing, even though it is in fact executing, the stock is drastically going lower. And if you take a look at the charts, you know, I do like charts, but charts are like the fourth or fifth thing that I look at. You know, macro environment is the number one thing that I look at. You know, what's going on with the world? Um, is oil going up? Is gold going up? You know, how is Europe doing? How is China doing? How are earnings? How are interest rates? What's happening? That's number one. Number one. And then sentiment. Like, you know, are people giddy? Are people negative? Are people in fear? You know, that's number two. Number three is with your stock. With the stock that you are trading, what is the sentiment on that specific stock? Okay, number four, what are insiders doing? Are they buying? What are they selling? And then charts. Other things too, and I'm not saying charts are not important, but charts are on the low list of the totem pole. And if you're doing a scalping, level two definitely. The macro, all the other stuff doesn't matter as much if you're just doing scalping. But for me, from my experiences past year, 2021, I speculated the most that I have in over 20 years. I was just buying stuff and throwing it. And for the most part, on the grenades, I did very, very well. But on the other stocks that weren't even grenades, like NLS, like Tiger, which is Chinese, I'm down heavy on Tiger. My average on Tiger is like maybe 18 or 19. I had 2,000 shares, so I'm down to 28,000 on Tiger. So what I'm saying is, so the stock is doing great. Negative sentiment on Chinese. Negative sentiment on Nautilus. I'm not sure why, because the company is doing well, but negative sentiment. So I might have to consider doing a stop loss of 33%. Now, I've never used a stop loss before. I've been trading since 1994. I never used it because if the company is executing, generally the market bids it up. You know, generally the market bids it up. But you have these mortgage plays like Rocket, UWMC, HMPT, LDI. LDI had bad earnings, not awful, but bad earnings. They still made some money. Sales were actually beat estimates, but they were down year over year. So, but the PE ratio is like 2 or 3. In my time before 2020, and they're all new. UWMC, Rocket is new, LDI is new. A lot of these are new. Coop is not new, but Coop has a low PE ratio. But a lot of them saw the market going through the roof, and they figure, hey, let's IPO. I'm going to go through that in another video. But right now, I'm saying quarter to quarter. To me, it's a cop-out with Cathie Wood. Cathie Wood says all these different targets, and she gives it 5 years. And 5 years, we don't know what's going to happen. I'm not going to say that her stocks are not going to make a move in 5 years. But we're all trading for now. And a lot of you guys don't even want to make money in a month. Money in 6 months. You guys want to make money right now. For me, I'm okay hitting a lot of singles, getting a lot of small gains, and it all adds up. Truth be told, I don't even calculate how much I make per day. I don't calculate how much I make per trade. I don't calculate how much I make per week, per month. I don't even calculate how much I make per year. I'm trying to make sure that every trade I make is green and it stacks up. That's why I call it stacking greens. But generally, I do try to make $150 or $200 per trade. So if I'm doing 5 or 10 rounds, you know, I'm trying to make $200 per trade. So that's the way I do it. I don't calculate how much I'm making per trade, per day, per week, per month. I just know it's going to be add up and it's going to do well because I've been trading so long. But this video is quarter to quarter. Remember, we are not running companies. A company could do absolutely great for 1 or 2 quarters and then it could fail in the third quarter. I'm not going to try to say that I know more than the company, But what I try to do when I add something to plays is if a company that I don't know or don't follow, I know quite a lot of companies, has a great earnings report. I might put in earnings watch. Those are companies that are doing well. If they have two good earnings reports in a row, then I'll move from earnings watch to plays and I'll trade it. If I trade a company that had just one good earnings report, I have to be willing to take the risk that it was a one and done and the company can't do that again, and be willing to risk if the stock goes down. But if a company does two good reports in a row, I feel more confident in trading it. There's a better chance, because this is a lot about probability, that the company will beat again on a third and fourth time. But we have to go quarter to quarter, because once again, we don't run companies. Most of the analysts giving you price targets are taking a look at the stock and giving you a price target on the stock and not the proper valuation of the market cap of the company. And a lot of them are giving you 1 year targets. So when you see and they're readjusting price targets, is because their target is way off what the stock is trading at. To me, that's not fair. So I go quarter to quarter. I see what earnings did. I see cash flow. I see sales, and I try to use my experience to give a trajectory of a fair price for me to trade it, because I'm not a trader. I'm not a scalper. I'm an analyst exploiting an opportunity that I see in the market, because retail is controlling the stock price right now, because retail is so big in the market, and all the other players are going off of that. And that's going to be video 3. So video 2, all right, quarter to quarter, we want to see what the company is doing, what the stock is doing, and sentiment.